Hello and welcome back to the channel. Thanks a lot for tuning in. I hope you're doing really well. Let's have a look at Bitcoin. So right now, today is Monday, November 11th, is 10 minutes to 12 in Europe. The price is 82,142 on Binance. Quick recap of the situation. We have extensions of an extensions of an extension as far as the Bitcoin price chart is concerned regarding Elliott wave count. What I mean by that is that we have a 1-2 in yellow, and within the third in yellow that we are forming, there is a 1-2 in red, and within the third in red that we are forming, there is a 1-2 in green. Yeah, that's not unusual, but it's not really ideal situation. We all would like to have a 5 wave to the upside, easy to identify, easy to count. Well, the reality is different. The reason why I say that it's not that easy is because if you look at the 1-2, then you can extrapolate the 1618 extensions of Fibonacci to have a minimum expected target of wave 3 in yellow at 82,900. And you're going to tell me why you make a video when we are about to reach the target. Well, I don't think we are going to stop there. Why? Because wave 3 in yellow, minimum expected target 82,900. For this to be the top of wave 3 in yellow, you would have to have the top of the wave 5 in green. And you would have to have the wave 3, 4, and 5 in red completed. We're far from that. We really are far from that, unless my count is completely to be thrown out the window, which I don't believe it is. It doesn't mean that it's right 100%. At least it works for me. The waves are there. The count is correct. There are other alternatives out there on different YouTube channels. I have made the decision to stick with what I believe is the most likely scenario, not because it gives high numbers in targets. That's actually what's troubling me. But simply because the count makes sense. Yeah, it's a 1-2, 1-2, 1-2. It's an extension of a wave of a higher degree. And so that being said, we can very much have this wave 3 get quite high in order to complete wave 3 in green, followed by a 4th and a 5th, before we can actually complete the wave 3 in red. If you look at the targets, the wave 3 in green, with the 1618 for wave 3 is 95,854. Yeah. So there is a possibility that wave 3 goes much, much higher than where we are at the moment. So I can already hear some of you saying, yeah, 100K. Well, doesn't have to be 100K. A lot of people are expecting 100K. We might actually not get it. We might stop at 98,769, for instance. Yeah, just to upset a lot of people. And on the way down, you can see a lot of people buying what others are selling. Always goes like that. So we need to be cognizant of one fact, and one fact only, is that we are in price discovery. There is no precedent, there is no history of where the price has been before on this level to help us identify areas of inflections or resistance or supply and demand. None of that matters anymore. Price discovery, it's a blank page. So we need to let the price do what it has to do before we can draw any, before we can make estimations that help us draw conclusion. We are far away from being predictable on this market. RSI, for instance, you can stop looking at it. We are in price discovery. RSI, at least when we are like this, making new highs, don't look at the RSI. It's going to give you false signals. Now, if price goes back and retraces price it has been to, and then goes back up, then you can reuse the RSI again. Yeah. But for the moment, RSI, I don't even look at it. The two things I look at are volume on the spot market and Fibonacci extensions, but not any Fibonacci extension. First, let's take a look at volume, because after all, it's the only indication we have of market activity, buy and sell. Very strong spike of volume, very sustained when price broke above the most recent high at, I think it was 73,600, yeah, 73,683. Very strong appetite to break this local high and make new high. So that's a good sign. As we are going higher, volume is getting thinner. It's still there, but it's getting thinner. So you could say that it's more expensive, so there is less exchange. Not really. I mean, you need to stop looking at yourself only. If you're watching my videos, you are certainly a retail trader. You're not a professional. I myself am not a professional. I've been in crypto since April or May 2017. I was in the stock market before that. I consider myself a retail trader. What you want to look at is volume, but also Fibonacci extensions, and not any Fibonacci extensions. You want to use Fibonacci's from areas of certainties, at least in my case. The top made mid-March, the bottom made early August. You draw a fib, you look at the extension. In the last video, was Friday or Thursday last week, I said we broke this level, so probably we look at 81,566. I was not daring to think that we would reach it that quickly because I've been accustomed to those overlap lazy move. The picture is different now. So the next level of interest is 95,463 on the way up. Yeah. Now, if you want to try your hand at looking for a top, it's a dangerous game. Simply because we are far away from a break of market structure. 66,820 is the break of market structure, is the most recent low in between the most recent highs. Yeah. But if you are of the type of being risky with your assets, you could draw a fib from the low to the current high and look for areas of where you may buy should price go down. That's a bit premature. It's just not respecting your capital that doing that. You want to let the market do what it has to do in price discovery and give you signs of fade in volume, of reaching a Fibonacci extension like I was showing to you, or breaking a market structure. And only those signs, at least for me, are worth looking at. Right now, the sky is the limit. The sky really is the limit. A 1-2 in yellow, a 1-2 in red with a minimum expected target for wave 3 at 86,300, a 1-2 in green with a minimum expected target at 95,900 for wave 3. This thing can keep on going and going until it finds a level where big money is willing to sell. I think that's the key message. Until we don't have a serious profit take, meaning a spike down with volume, you cannot foresee precisely more than usual where price is probably going to find a resistance. So no short, no guesstimate, let price do what it has to do. That's my message, because it can be really ravaging. If you want to look at it very simply, we just started a bull run out of this wave 4 correction. But we started it 2.5 months ago, but it's still very young. So let price do what it has to do. If you miss the train, if you don't have any spot, now is not the time to buy and chase green candles. That's the second message. Now is not the time to buy. You missed the train, you missed the train. Slap yourself, bite your fingers, sit on your hands, wait for a significant pullback. Yeah, now is not the time. If you look at the futures market, two things are very interesting. 2 videos ago, we were somewhere here and I was saying, no, we were out of the zone, but I was saying this was probably most likely the bottom for this correction, simply because of the aggregated delta spot activity, a lot of positive delta across several exchanges. So meaning a lot of absorption. Price was going down, making lower highs and lower lows, but a lot of people were buying Bitcoin on the spot market. This is a futures chart, but this particular indicator is for the spot market. And I was saying it's probably the bottom. Signs are pointing towards it. I wouldn't be surprised if we go back up. Well, we did. Go back up. Now, something is even more troubling, and it's hard not to be overly euphoric and optimistic, because if this area and if this delta activity signal a run up as an absorption, what the heck is this? Look at this positive delta. This is some really thick, aggressive, hungry buying of Bitcoin spot. This, yeah. Only one spike down. Someone got spooked on this candle here. It's a very, look, I mean, this is crazy. Look at the candle. The candle has a body as futures market, 81,488 all the way down to 80,700. So let's call it at a $650, $650, 700, 800, less than $1,000. We are at 81,000 for goodness sake. A candle body of less than $1,000 causes a spike down of minus more than 40,000. What was it exactly? 53,000. Am I displaying the coins or the dollar value? Trade delta. So 52,000 sold on a small candle, like somebody got really spooked. Maybe it's a profit take, but if it is, it's a very shallow profit take, and we're going to go much higher. The open interest is going back up again after going down, making lower highs and lower lows since we made a high on, when was it? November 6th. So it's quite some time ago, a week and a half ago. The open interest was not giving any indication that price was going up. The run-up we had was driven by the spot market. And this is what I said in the last two videos. If you want to judge the authenticity, the genuinity, forgive my English, it's terrible, of a move, you look at what the spot market is doing. If a price is driven by spot market, you can be sure that it's authentic. If a price action is driven by futures market, it's just traders playing around. Yeah, regardless of where the price is going up or down, it's just traders playing around. We've had some strong absorption, some stronger absorption. Like all the signs point to we're going to go much higher. We're going to go much higher. Even though maybe we might have a stop in a very short term and then a pullback. Yeah. But why would traders and holders absorb so much Bitcoin? I mean, they haven't had that in a long time, long time. On the most recent highs in market discovery, why would they buy so much? There are ones that are willing to sell at these prices, yes, otherwise nobody would be buying. If there is no seller, there is no buyer, period. But this is very thick, like, unless we have a huge whale that is offloading a nice stash of coins. If that's the case, well, that's a lot of effort, a lot of patience for 9 months almost to release the coin just 10% after making a new high. Yeah, it's possible, huh? It's just the numbers don't make sense. Yeah. So until proven otherwise, meaning a break of market structure with strong volume, I still consider that we need to buckle up. We need to buckle up on this Bitcoin chart. That's the end of the video for Bitcoin. I rambled a lot, but it's really critical that you don't lose sight of where we are, even though we don't know where we go. But the signs are there. Strong volume, price discovery, a lot of absorption. extensions of extensions of extensions, we might go quite higher than that. Thanks a lot for listening and watching this video. Leave me a comment, put a thumbs up, subscribe to the channel. You take care. Bye-bye.